The PSEi retraced back to a temporary support level. Will we be able to rally this week? Let's discuss. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. So the market breathed a sigh of relief as the Fed held rates steady during the FOMC meeting last Wednesday. Coming into this week, sticky inflation numbers had investors worried that this may force the Fed to raise rates. But Chair Jerome Powell was able to play down the likelihood of interest rate hikes, bringing relief to investors who were worried that recent signs of sticky inflation might prompt that move. Locally, analysts are expecting a median of 4.1% inflation rate this April, which is higher than the 2 to 4% target range for inflation. Upside pressures on inflation is currently coming from continued price increases for rice, meat, and gas, coupled with the peso reaching 57.72 last week. Also, PMI numbers climbed to 52.2 in April, suggesting that manufacturers are building up inventory in anticipation of greater demand in the near future. With this, the Philippines continue to outpace its ASEAN neighbors, and we are also showing a faster rate of growth. But while the Philippine index closed down heavily last Friday, look at that shooting star formation, the U.S. jobs report had unexpected results as the jobs growth and unemployment rate started to show significant weakness in the labor market in the U.S. April's non-farm payrolls rose by only 175,000, which fell short of the 240,000 expected by Wall Street. The unemployment rate also ticked up higher to 3.9% versus 3.8% expectation. If you look at this chart, jobs growth has been slow and steady, beating the conservative estimates all throughout March of 2023. But this positive development here helped increase the odds of rate cuts coming into 2024. So we'll see if there's continued follow-through in these numbers over the next few months. As a result, look at the 10-year yields. It pulled back to 4.512, and thus the dollar index also went down briefly, touching 104.54 support level here before retreating to 105.076. Good news for the peso as it ended the week near its 57 support level at 57.13. So, looking at the 1-hour PSEi charts, the markets ended last week retracing back to this level here at 66.15. As I explained last week, the uptrend continuation here needs this bounce off of the support level to maintain this rally. Now, looking at the economic calendar this week, this is going to be a very, very busy week for the Philippines as we will have inflation data on Tuesday, then unemployment rate on Wednesday, then GDP numbers this Thursday. Now, all of these results will, of course, give us a clue for the BSP's upcoming rate announcement, which will be on May 16. So, with these in play for this week, how will these data affect the markets? So, let's piece all of the data together, right? So, last week's unemployment numbers in the US gave us reason that rate cuts are back on the table for 2024. So, as a result, yields went down and the peso appreciated to 57.13. So, there's reason to believe that the peso might strengthen back to the 56 level. So, that puts less pressure on the BSP to raise interest rates this May 16. Now, we will get inflation numbers next week. Will the markets hold their breath for that? While 4.1 is not such a good number because it's up from 3.8 last month, with inflation pressures seeming to ease up a bit, it might present some good news for the markets when it opens on Monday. So, PMI numbers also came in at 52.2, which is a very positive sign for economic growth. So, GDP numbers are estimated to be at, 5.6%. As long as we are in line, this is still a positive narrative for the Philippine economy. So, we have reason to believe that the PSEi might be able to bounce back this week. Let's look at the sectors for the PH markets. Now, on a monthly basis, utilities have performed the best, followed by financials, while the real estate sector was the worst performing sector. While on a 7-day basis, we are starting to see other sectors catch up. No, we have healthcare, we have consumer staples and consumer discretionary catching up. There's a reason why we're seeing these results, and this is where macroeconomic comes into play. No, interest rates remaining at high levels have been the narrative for the last few months, which is why we're seeing a big hit on the real estate sector, even if they have very good earnings results. Now, inversely, of course, higher interest rates are benefiting banks, so which is why they are doing quite well. Now, utilities as a defensive sector, of course, will perform well in a high inflation environment. So you can look at company earnings all day. You can look at technical charts all day. But you also have to incorporate the economic backdrop in which these companies are operating in, whether the economic winds, no, are friendly to their business or not. So let's look at the PSEi charts. We went through some technical charting last week, and let's continue to see how we did. No, we are currently at a soft support zone for the PSEi, and if we go back to the 1-hour time frame, we can see again this double bottom here, a rally, retrace, rally, retrace. So here we have a rally and a retrace. So again, we want to see the support test here successful by bouncing off of this and then continuing this rally back to 6,764. Given the economic backdrop with rate cuts back on the table, we could make a biased guess, no, towards the upside, and things so far are looking good. So if we will see if this translates to price action this week. Now, let's look at some stocks that we were monitoring last week. Remember, we said that AC was on a downtrend here and we could possibly see a double bottom, but AC did a reversal here which formed a higher low, and now it has retraced back here. Now, ideally, it just retraces back to somewhere here. This is a bit too deep, but we'll see if AC will be able to continue this reversal this week to verify the uptrend. Now, JFC sold down last week, almost touching my buy zone here at 216 actually. It may have been negatively affected by the Starbucks earnings because they reported weaker than expected sales out of China. Of course, we know that Jollibee has significant exposure in China. So this could be why it had a drawdown. But for this week, let's see if Jollibee will be able to defend the support zone and bounce off of that. And if it does break, we will see the next support levels here at 210 and 204. Now, for our real estate stocks, remember we are operating in an environment which is not favorable to real estate stocks. So we were expecting a bounce here to continue the rally, but Ali succumbed to selling pressure and it is back at 2680. So the next level of support here, if it breaches that level, will be 2625. Same for SMPH, right? Remember, last week we said that it had to break through this. It had to clear this level to confirm that it's going to form a higher high, but it did not. So it broke down, and again, we are back at 2730. And if it breaks down from that level, 25 will be our next support level. So we can see how the macroeconomic backdrop may also factor into the success rate of technical movements for real estate stock. Let's see, maybe Ali and SMPH will be able to defend this zone coming into this week, given that rate cuts are back in the table for 2024. Of course, our banking stocks doing quite well. BDO, PPI, and Metrobank all managed to bounce off their support levels, but they've now retraced. I wonder how the rate cut narrative will affect our banking stocks coming into this week. Now, let's look at GT Cap, right? We mentioned last week. Remember, we ended last week here, and we said that GT Cap had to clear this and then retrace to continue the upward trend, and it did so, right? So it did so, and this is looking very good. So hopefully GT Cap can continue its uptrend towards 657. Also, we can look at Monday. We still have our drawing here, right? Up, pullback, rally, pullback. It had to defend this zone, but this is still a good zone to defend because this was previously resistance, which now becomes support, and it was able to bounce off of that support to continue that rally for Monday. See how being patient, no, especially with our real estate stocks, no, can prevent you from entering prematurely into stocks, right? So now for the overall markets, let's see if we are able to bounce this week. If we go back to the one-day charts, remember that we are still in a downtrend. And for most of the stocks, this huge sell-off, like JFT, this huge sell-off here will have several layers of resistances that we need to overcome in the next few weeks. Now, look at these resistances, Ali. Look at these resistances. And usually, markets tend to move towards the path of least resistance, right? So, which is why for stocks trending upwards, we have MWC here, right? Trending upwards. Monde here. Pullbacks could be good opportunities to buy into these stocks. Now, for banks, yes, we could probably buy on pullbacks, but given that rate cuts will negatively affect banks, no, I suggest you hold banks if you have these stocks, but it may not be a good idea to chase banking stocks at these levels, right? So, onto the global markets, let's look at the S&P 500. It was a good Friday last week as the S&P 500 was able to bounce back from this critical support zone to end the week at 51.35. So a good close above the 51.20 resistance here. With renewed hope for investors of a rate cut this year due to the weak labor market, hopefully the S&P 500 will be able to continue its rally towards its next resistance level here at 51.50. A good movement will be for the S&P 500 to challenge this, retrace back, and then proceed to break the 51.50 resistance level. In terms of the seasonal charts, so we managed to bounce off from this drawdown here, so we could probably either consolidate or maybe start our move up prematurely. We're not going to exactly copy this movement, right? But we do expect the normal April to May dip before gains in the last 7 months. And again, earnings played a big part to justify the market's current valuations, right? Apple came in last week with earnings that helped the markets go up, right? And of course, the magic word, AI, right? So we did get some generally favorable results from most of the companies. The healthcare sector doing quite well, along with semiconductors. And again, Starbucks, as we mentioned, hit by weak demand from China. Now, speaking of China, remember that last Chinese New Year, that it was starting to look promising. This was during February, right? And look at where the Chinese market is now, right? So, congratulations if you were able to ease into some of these Chinese stocks. No, personally, I was able to open small positions on these 4 Chinese companies. We have Xiaomi, we have Tencent, we have Lenovo, and we have Alibaba. So far, so good. Looking at the US sectors, utilities also doing very well in the US sectors. So defensive sectors still performing very well in an environment where we have potentially high inflation. So more earnings this week, not as big as last week's earnings. It will be a quiet week in terms of economic numbers as there will be no major economic announcements this week. But these companies here will have implied movements up to 19% either way. We have Lucid and Palantir with very large volatility possibilities. We also have Disney reporting with a plus or minus 8% movement. No? For a big company, that's really a big move. No? So we'll see. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risks accordingly. And I'll see you again next week. Bye-bye.